Well, good evening and welcome back to your financial independence. As promised, I told y'all I would have an update on the Chewy's earning call that happened September 1st. A lot of people took it a bad way. It wasn't the best earning call, but I can show y'all I just got through the conference call, looking over the 10Q, the shareholders letter, and I can tell y'all I'm still very confident in this company and the stock price. If it continues to fall down, I will explain in this video why I'm going to continue buying. So I hope y'all enjoy the video. First, we're going to go over the 10K, some of the stuff that I saw in there, and then I've got 2 pages worth of notes from the conference call, and at the bottom, some price to sales ratios. That way I can show y'all why I'm investing in this company now and why I still think it's somewhat of a deal. It isn't as good of a deal as when I was buying it in the $40 range. It kind of has doubled up from there. We're basically at about $80, or I think it closed today at 76 and some change. So basically a double up. So I will show y'all why I might add to my position and average up in my position as far as average cost per share. So I hope y'all enjoy this video once again. Let's get started on the 10Q. So second quarter net sales rose 27% to 2.16 billion, which was a miss. I want to say analysts were expecting $2.17 billion. So net sales growth, in their conference call, they said this too. It's basically, you want to look at it at a 2-year graph or chart, whatever. That way you can kind of average out, the pandemic, when a lot of e-commerce plays, boomed off of that, so that you can get a good CAGR growth rate. So net sales growth for the 2-year stack, the 2-year compound annual growth rate, 37% compound annual growth rate, which is amazing. So out of stock levels, this is going to go into the supply and demand a little bit. Out of stock levels remain elevated in the second quarter, but they improve modestly. So now we're going to go into the active customers they have. We ended the second quarter with 20.1 million customers, a year-over-year increase of 21%, or 29% if you look at the 2-year compound annual growth rate, or CAGR. So gross customer adds and are running higher than pre-pandemic levels. So if you look back in 2019, before the pandemic, they have already risen above those growth rates for new customers. So totally excluding out COVID and how much that helped e-commerce businesses, they're already growing faster than they were pre-pandemic for the customers. So now, year to year, we have acquired approximately 20% more new customers than we did in the first half of 2019. And all of this, while they even said it in their conference call multiple times, that retention rates are stable. So meaning retention rates of active customers, or the subscription service that they do have, or the auto ship program. Let's say like 100 people are on there and then 10 leave, you would have a 90% retention rate. They didn't give us the actual retention rate for the updated quarter, but they said multiple times retention rates remain stable. And retention rates for these type of companies, e-commerce businesses like Amazon, stuff like that, Etsy, they remain pretty stable. So one of the commonly used phrase on their 10K and on their conference call that they stated a lot was NSPAC, which stands for net sales per active customer. So the average customer, how much money they're getting off of them in net sales. Second quarter, NSPAC increased 14% to $404. And this is the first time in the company's history that the NSPAC has risen over $400 per customer. So both the year-over-year and sequential NSPAC increases were larger than the company's entire history. So this company is still growing at phenomenal rates. So now we're going to move on to the SG&A and customer experience. We recently announced that our 14th fulfillment center will open near Nashville, Tennessee in the fall of 2022. Custom-made boxes based on the size of the contents. So basically, if you only order dog treats, that's going to be a lot smaller of a box than say a 60-pound bag of dog food. Which and if you order both of them, they'll throw the dog treats in with the 60-pound bag of dog food. But they're looking at their box sizes. They're trying to get those right. And you might not think that's really expensive, but whenever you're shipping out like millions and millions of orders, I mean, cardboard boxes the prices can go up a lot, or the price at which it costs you to ship your product. So not only is this going to be cheaper, but they also said it's going to be faster for the manual pack and ship, but it also reduces the amount of corrugate and the packaging material, so it's better for the environment. So faster, cheaper, and better for the environment. It's a win in all categories, so I'm glad they are focusing a little bit on that. Now, we expect increased fulfillment productivity, about 40 to 60 basis points of incremental SG&A, operating leverage, and reduce our future exposure to the labor market volatility. Like I'm sure we've all heard in the stock market right now, there's jobs everywhere, not enough people to fill those jobs. So they're making their strategy where if this happens again in the future, it will hurt them less than it is now. Because I mean, let's not get it wrong, it is hurting them in the short term as far as the labor market volatility, but they're putting in work to better that, and we'll get into that in a little bit. So now they're deploying new software across the fulfillment center network to improve productivity, reduce per unit fulfillment costs, and positively impact sustainability. So they're using technology, that way they can stop this in the future. Now we're going to get on to the Chewy Health, which is a big category, and it's going to create a lot of exposure for Chewy in the long term, in my personal opinion. So I love that they're always thinking big, like right here. Think big and innovate rapidly. That's what you want to do as a growth company, especially an e-commerce growth company. So now, launch their first marketplace for veterinarian directly on Chewy.com. So all these veterinarians, I mean, we'll get onto the number later, as you can see down there, but say your local veterinarian, like we have one about 5 miles from our house. So now they can set up their website if they are one of the 8,000 clinics. So we'll go ahead and just say the number. If they're one of the 8,000 clinics, they can set up a website on Chewy.com. That way customers can order from the vet, like at the retail location, and then that business gets transferred over to Chewy where they ship to the vet, or the customer can simply go onto their app or website and then order from there. So more exposure, and think of 8,000 clinics across this country, how many customers that's going to give Chewy in the long term. And a good percentage of them probably will be long-term customers as far as how long they use the company. Because I mean, if you get a dog, more than likely the whole rest of your life, you're going to have a dog. There's probably a small percentage that like, oh, this ain't right for me, I don't want pets. But for the most of us, and I'm sure y'all see around y'all's family, you always have a family dog. Like that's just a common thing for American households, or a high percentage of people do. So they launched this veterinarian service on Chewy.com. It grows the clinic's revenue and improves the experience for the pet parent. So it helps both parties. And as we just said a little bit ago, currently in use at more than 8,000 clinics across the country. So this is already in use in 8,000 clinics. Imagine that number, growing over the years to 12,000, 16,000, 20,000 clinics. Like that number can get huge, and that's going to create foot traffic for Chewy on their website and just get the word out to everybody over the long term. How'd you get your medicine so fast, or whatever that you needed from the vet? Oh, Chewy had it, they shipped it. The next day it was at my veterinarian, so I just went over there and picked it up. Or you get it shipped to your house. And in the near, future, with them building out fulfillment centers, it's just going to be like Amazon Prime, basically, for pet stuff for pet parents. The more fulfillment centers you get, the faster, like 1-day shipping. They're more efficient. The scalability is going to increase over the years. So now real quick, we'll just touch on the pharmacy. They're going to be opening up their third pharmacy. This is located in Pennsylvania. Will provide fulfillment services for the pet medications and special dietary food, providing Chewy Health customers in the Northeast and Mid-Atlantic with even faster delivery for the pet prescriptions and other health and wellness products. And just to throw in a reminder, like this is compounding net sales increase of almost 50% sequentially before first and second quarter, about 250 basis points. And also don't forget that per year, like this is a $35 billion, as right here, TAM, total addressable market. So $35 billion, and they say here rapidly expanding. So, I mean, this company for the next decade just has it has so much room to grow. So, they say at the bottom, most importantly, we're just getting started. We are working on multiple new innovations across Chewy Health, and we are looking forward to sharing them with you in the months ahead. So, whether that's next earnings call or the one after, like we should be looking at the health of, the Chewy Health products for more innovation, more growth in that segment. So now that we went over the numbers, we're going to just do a quick recap. So net sales 2.16 billion. Analysts were expecting 2.17 billion, so a small miss. So auto ship customer sales were 1.51 billion, a year-over-year increase of 30.3%, and reached 70.3% of the total net sales. And then gross margins are coming in at 27.5%, a 200 basis point improvement over the previous year. And now one thing that gets skipped over a lot of people forget about the free cash flow. So this is money that's basically coming in from operations after it skips every other, thing that the company has to pay for. Free cash flow is basically how they can get